All right, welcome back to this week's breakout watch list from October 9th to the 13th. In this video, I'll be covering the top 10 swing trading setups going into next week. Each of these stocks either have strong fundamentals, strong technicals, or volume clues that lead to uptrends. And before we get started, this video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the setups. Here are the 10 stocks I'll be covering in today's video. We did get a follow-through day on Friday, meaning it's time to test the markets again. We'll kick things off with Abercrombie & Fitch, ANF. This has been a personal favorite stock of mine this year. It's been on the breakout watch list multiple times, and it continues to act still pretty well. Most recently, it rallied into all-time highs before eventually pulling back on slightly above average volume through the 8-day EMA to the 21, bouncing there both Thursday and Friday. Friday, we finished up 0.9% back over the 8-day EMA. What I would like to see here is more market pressure in the first half of the week. Allow this to tighten up a little bit more, then we could use Friday's high as a potential entry point. Or if we do see that pressure and you've already built a position in a little bit lower, then using that 21 EMA where we found support both on Thursday and Friday, right around that $53.25 area, you can build a position into that area and then use the stop below the 21 EMA, below Thursday and Friday's lows for a nice tight risk. And then as your position works, as ANF finds a bid, if it does, then you can finish off the position through Friday's high. Next, we have APP, another name that has been on this watch list for a very long time. Computer software, really strong group, continues to show up in my relative strength scans, 38th strongest group out of 197 right now. APP most recently rallied into new highs on the 18th of September before eventually having a really rough 3 or 4 day period where it cut through the 8 to 21 EMAs on above average volume, pulled into the 50-day moving average and the HVC, the high volume close from the previous earnings, and did respect both of those areas, so there is still a bid on this stock. From there, it rallied about 6 days back through the 8 and 21 EMAs before tightening up, having a nice shakeout on Friday before closing in the upper half of its daily range, back over $40, back over the 8-day and the 21 EMA. With this, more time building out, allowing that 50-day moving average to come up to $40 would be ideal, but this is one that it's in the right group. It's one of the leaders in that group. So if we do come through the pivot, the previous high through here is 41.05. That would be the area where I would want to finish off my position. Right now, I don't have any position in the stock, but if we can pull into $40 on maybe a tough day in the market and hold that area, that's a place to start building your position, then finish it off as it comes through the pivot at that 41.05 area for APP. Next, we have BRZE, sticking with that software theme. I did trade this through the 50, higher low 50 pop here. So we put in a low, rallied up to the 50-day, a higher low, tightened up, and this was the day I bought on the 29th. Ran it into earnings, did pop on earnings, but eventually had to pull back after touching $50. You see the high here is 50.13. From there, we pulled back to the 50-day moving average, but we did so on lighter than average volume. And as we rallied back through the 8 and 21 EMAs, we actually did so on above average volume. So while relative strength here kind of did take a dip, it did that on lighter volume, and we're seeing still accumulation around this area. Thursday and Friday, both accumulation days, closing in the upper half of their daily range. Friday up 3.4%. What I would love to see here is pulling back on the indexes, more market pressure, pull this into the 8 and 21 EMAs and get a nice tight entry point for BRZE. Next, we have DraftKings, which is another perfect example of that higher low 50 pop. We did break under the 50-day moving average. When was this? On the 21st, rallied back up to it, pulled back, putting in a higher low, consolidating, nice 3 days tight pattern here. And then on Friday, we moved through the high of Thursday. That was the ideal buy point for the higher low 50 pop setup, right through 28.80. As you can see, it rallied another 2 or 3%, finishing the day up 4.5%, back over the 50-day moving average. The second area where you can buy the higher low 50 pop is as it rallies, then pulls back, then you have the 8, the 21, and the 50-day all right around the same price. So we're looking for, if I bring up the temporary line pen, maybe another day or so pushing through 30, then pulling back and having the 50-day catch up to that, the 8 and 21s also. So you get that launch pad setup, nice support right around that area, and you're still not buying it extended. So if DraftKings does just rip from here, then it's a stock that I missed, but I'm waiting for that pullback, launch pad setup, maybe build a pivot around $30 for DraftKings. The next stock that we have is Meta, and for full disclosure, I do have a position in this already, about 18%. This stock ran from 88 all the way up to 326 before correcting 16% as the market was correcting. And although we did kind of undercut on the 50-day, it's only a 16% correction from the highs after well over 100% move. That's extremely strong action. And what really makes this setup ideal for me is the shakeout that we had on the 27th, taking out the previous lows on the 7th and on the 21st. From there, we rally up through the 8th, 21, the 50-day, tighten up for about 6 days, and you could see the relative strength line just going in a very clean uptrend as the market was correcting, and this was going sideways. Then on Friday, that was the ideal buy point for this setup. You had the 8th, the 21, the 50-day moving average right on top of each other. Price comes through that area. There's also an unfilled gap on a closing basis right in this area that held support on Friday before reversing and taking out the high from Thursday. I continue to build out the position through the day on Friday. Now, if you don't have a position in this already, what I'm looking for is a pullback to that breakout point. So right through Thursday's high was 306.21. I'm looking for a pullback into 306.21 area and seeing if more buyers step in there to really fill out the rest of my position. Because this is a very liquid stock, one of the Magnificent Seven, and the relative strength, doing everything right, it's a stock that I wouldn't have a problem putting on 25% position size. Right now I'm at 18, but that next 7 really comes with relative strength and if the market starts acting well. Next we have POWL. This is an electric power equipment, 32nd strongest group out of 197. So we do have that A group strength rating, along with a 99 overall composite rating and a 99 individual relative strength rating. Whenever a stock that is liquid enough has both of those 99 ratings, it's something that has to be in the universe of stocks that I'm watching. With this, it did pull back and undercut the lows of the pullback right around the 50-day moving average, did so on lighter than average volume, and then immediately turned up through there, had a rally through the 8-day, the 21, not all the way to previous highs, which is fine. You still see the relative strength line putting in new highs and new lows. From there, tightened up for about 6 days. We got the 8 and 21 right below us. What I would love to see here is this to continue to flag out. And if the market comes under more pressure, you have the 50-day moving average catching up. And kind of what we talked about with Meta, we would have that launch pad set up with the 8, 21, 50-day, all below price, really tight price action with increasing relative strength, and you can manage your risk there. Next, we have Sphere Entertainment, that light up globe in Vegas that everyone's talking about. Recent IPO that's starting to act a little bit better, but it is still an IPO, still relatively whippy. You're not going to be able to use a 2% stop on this without getting stopped out. Rallied into new highs at 43.93 before undercutting the 50-day moving average. Rallied back through the 50-day, pulled back, higher low, tightened up, and then got going again on big volume. I want to say this was about 500% the average daily volume. Since then, we pulled back a little bit, had a nice shakeout on Friday before closing in the upper half of the daily range, up 3.2%. But with this being an IPO and the NASDAQ under a downtrending 50-day moving average, there's no need to get aggressive up top here. I want to wait for this to pull back into that range that did find buying support and see if I can manage my risk against maybe the 50-day moving average or the low on Friday. We got 3 more stocks to cover. This one's Tesla, TSLA. This is one that started correcting first. It was the first stock to gap down on earnings through the 8 and 21 EMAs on above average volume. Eventually kind of came into the breakout point, found buying support at 212, rallied back up into 278, and then put in a higher low here. Tightened up through the 8, 21, 50-day moving average, popped that on Wednesday, sideways action on Thursday, then a tight close on Friday after a shakeout to the $250 area, $250, and the 50-day moving average before closing right near the highs of the day and right by the previous close here. More consolidation into the $250 area would be perfect, ideal, but if it just takes out Friday's high, it's a liquid enough stock to where you can put your stop under 256, and it's not too wide of a stop, but because the NASDAQ's still under a downtrending 50-day moving average, again, there's no rush to really build up positions. This is a name that's holding up better than most, above all the key moving averages, 96 relative strength rating, but it does have earnings in 10 days. So a couple different forces playing on this. Still want to put this on your radar. Next, we have Uber, and for me, this is very similar to DraftKings, where it showed a lot of promise, then eventually broke under the 50-day moving average, rallied back up, put in a higher low there, and then Friday could have been your buy point through Thursday's high, getting into that first initial burst to the 50-day moving average. Once the stock gets back over the 50-day moving average, tends to get on people's radar again, so we'll see if that happens with Uber, just like it did over here, where it undercut the 50, rallied up, came in, tightened up, and then popped it on the 29th. So we'll see how this trades. If it just immediately starts to run, I'm not going to be chasing it here, but if we can pull back into 45, build a pivot around there along with that 50-day moving average, that would be perfect. If I miss it and it runs maybe a little bit higher, 47.50 area, then on that pullback, just like we talked about, I think with DraftKings, we're going to have that launchpad set up with the 8, 21, 50-day, all slightly below price where we can manage our risk against for Uber. And lastly, going back to that computer software theme, we have VMW. Not the fastest moving stock in the world, but it has been showing great relative strength. You can see relative strength line in a nice uptrend, 95 individual relative strength rating, 92 composite, 38th strongest group in the market out of 197. So you have that A- group strength rating. And with this, what I like is it pulled into the 821 EMAs after a gap up and then gapped right back up into that area, has tightened up since, but does have a shakeout day. These shakeout days, similar to Meta, is something that I look for because it cleans the deck. People that got shaken out, had their stops hit, need to buy it back as it comes right back through the area, tightens up, and then again, a lot of the stocks that I covered today, their ideal buy points would have been on Friday, but we're looking to see if there's either follow through or continuation to show relative strength as the market pulls back. Who knows what the market's going to do on Monday with all the war news over the weekend. So if we do gap down, continue to focus on the stocks showing relative strength. And that's going to be the breakout watch list for the upcoming week. I hope you guys enjoyed the video, and I'll see you next time.